This is the best investment website I have yet to find. It's nuts. And I cannot believe it's been out there for years. And I've just made aware of this today. It's crazy. I'm dismayed my ignorance about these guys over at this website I'll share with you. So the backstory is there's a guy named Nick Murray, all right, and he's written a number of books for financial advisors, and I had come across his book in 2004 when I was in the training program to be a broker with Legg Mason. Now, I can't remember if they gave it to all the new guys. I can't remember, but anyway, I came across it and I just devoured it. And I almost didn't open it, and I was glad I did. It is divine intervention for sure, because it literally changed my life, essentially, my career, which also helps to change my life and the way I see things as a financial advisor. It was nuts. It was nuts how important that book was to me. Anyway, so Nick Murray's been writing for a long, long time, again, geared towards financial advisors, but lots of great information that anyone can just gain from it for sure, just any kind of investor. Kick in the pants. He doesn't mince words. He doesn't suffer fools. It's just fantastic. He started a newsletter back in 2007 or 8, and Nick Murray's newsletter and Horse's Mouth were two of the things that I found money to subscribe to. Both those things. I didn't care if I was going broke. I'd find the money for Nick Murray and Horse's Mouth if I was going to stay in the business. And it just happened that for the last, I didn't renew my subscription last year, I think, or the year, I can't remember, but for a while, and I didn't even know, frankly, until something happened the other day. I said, "Oh man, for Nick Murray, I forgot for his subscription." And even if you're not a financial advisor, you should look at Nick Murray subscribing to his newsletter. It's $300 a year. It's not a huge amount of money. And it's worth every penny. In fact, I'll show you this website is worth a subscription for this year. And I emailed him, and he agreed. He said, "Thanks." I mean, he's a nice guy. He does a lot of speaking on behalf of financial advisor industry. But I'm just telling you, man, even if you're just interested in financial investing, financial planning and things, Nick Murray, you'd be crazy not to subscribe to him. He's a capitalist, all right? He's not afraid, unabashed, pro-American. He believes in equities. He does not like bonds. So, it kind of reminds you of someone right? Your old buddy Josh here. And a lot of stuff I knew going into finding Nick Murray, his stuff agreed with me, if that makes sense. That's not, literally not really, but like, oh yeah, here's a guy talking like I talk, which is, wait, America's a good place. It's done incredibly. It's done wonderful by many, many millions of people. Let's not discount that. So anyway, so nickmurray.com, if you want to look up his newsletter, I highly recommend it, even if you're a financial advisor or not. It's just as wonderful, and it's like $300. It's worth it. All right. So I was reading an article. So when you subscribe, you have access to all his archives, like going back, I can't remember, 15 years or something like that. And he shared with us this website today, Political Calculations. And and I had never heard of Political Calculations. I'm telling you, man, this thing is nuts. It's politicalcalculations.com. It's not politics per se, but it's more finance and investing, economics. And ode to the spreadsheet, which is the first post of today, which I said, oh, that's pretty interesting. That doesn't sound political. But anyway, if you go down here, you start seeing all kinds of stuff. Regional real estate trends in the U.S., a year of trade losses, you have just all kinds of stuff. Tax revenues, a sign of a rebound in Western U.S. existing home, just tons and tons of stuff. First-time visitor on the, oh my goodness, I couldn't believe it. So I'm reading all this, and they got all these resources. Wolfram Alpha, I downloaded that one time. I just never got into it. But then I started seeing Cafe Hayek, which is good, Carpe Diem, which is good, Econologue. So a lot of these guys are going to be similar to me in terms of the laissez-faire, libertarian-minded, which I like. Let's see. I read Instapundit. That's my first go-to in the morning. But let's see what else they got. They got down here, which I thought was pretty interesting. Books they recommended charities, Heritage Foundation, the Salvation Army, but recommended reading. And they had in here The Count of Monte Cristo, Empire Wealth. Just stuff for me is just as like I'm in hog heaven. So these are libertarian-minded, pro-American. I hate to even say, because like I said earlier today, some libertarians aren't as big on America as I am. But anyway, just tons and tons and tons of stuff. But what I love most was this website. If you go here, this link, so you go up here, and they're most popular. So you click on the S&P 500 at your fingertips. And I just love this right here. And this is dated 2006. It's 2019. I had no clue. I cannot tell you how many times I spent finding information that right here is literally at my fingertips. It's nuts. So I said, okay, guys, I want to put in my date of birth and I want to see what the S&P 500 has done since that relative to all these various other things I'll show you. It's a wonderful tool. So I was born in July 1970. And here to say, hit calculate, and what you find is here's your S&P 500. The index in at my date of birth was trading at $75 a share. Dividends were $3.18 a share. Earnings was $5.47. All right, your dividend yield was 4.20. Your PE ratio was 1384. All right, so that's a low PE ratio, and then your CPI is 39. So this is going to share with you not just the price increase, but also the inflation increase as well. And so if we fast forward from index price, so let's go here. We start, all right, so we're going to show you something here. This is nuts. We're going to do one, enter, okay. So here, we start at 75.72 on my date of birth. No payments. We have 40, what's that, what does it say, 48 years. We have a present value, a future value, 2803, and then we have no payments. So we have averaged 7.9% rate of return on the index price, 7.9. What has CPI done? So remember, 7.9 annually, let's just say 8% for simplicity. That means it doubles every, 9 years. All right, so what's the CPI? So remember that, 7.9%. The CPI has gone from 39 to 255. That's 3.9. So basically, the S&P 500, the index price, not including dividends, has gone up twice that of the inflation. Does that make sense? Now, let's factor in return with indexed is 10.92 with dividends, 10.92. You hear me? So the return with dividends is 10.92. So let's do this. You ready? So we have an inflation that's averaged 3.93 since I was born. So $100 present value. Let's see. We got to figure out our future value. So 3.93 is our interest rate. 48 years. No payment. So that $100 I need $636 in today's numbers to be able to buy what $100 did in 1970. All right, that's what I need. So now let's say we have the same thing with the S&P 500. 100 is our present value, but here with dividends reinvested is 10.92. It's 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 freaking crazy, man. 14,470. I should go the other way around. So we both start with 100. I need $636 in purchasing power today to have the same purchasing power as $100 did back in 1970. My $100 though in 1970 is worth $14,470. Tell me that's not nuts. $100 present value. Let me just figure this out. 48N 10. What is that? 10.92 interest. 14,470. I mean, it's crazy. That's nuts. And now, if you take out without dividends reinvested after inflation, it's only 3.69. But with dividends, see, that's the value of dividends. I've done other videos on that. But the idea that bonds can give you a reprieve from this is nuts. And they say, "Oh, but Josh, the PE ratio is so high." Man, it's not that much. I mean, yeah, it's 50% higher than historically. Historically, well, when I was born, it's 14. Now it's 21. That's a 50% increase. But what's the bonds doing? The bonds back then were paying, what, 6? And now they're at 2, 2.5, something like that. Yeah, but you can go on this forever. I love it, man. There's so much stuff on here. So let's say my wife, she was born in 1974. We'll go down, and she was born in May 74. I gotta go this way. And you can do it for everything. You can do it for your kids. You can just say, man, so let's do calculate. PE ratio then was only 10.41 because that member 74. The markets got killed in 73 and then 74 as well. So we got routed. But here, her index with full reinvestment is 11.18. So she's 45. The literally just turned 45 the other day. 11.18 is a return. So that's worth 11,781. And CPI is from 48.60 to 25.46. Am I doing this right? 24.86 to 25.46. That's 3.7. There you go. So 3.7. So we got 100 is the present value. 3.7 is the interest rate. 45 years, no payment. That means 512. Yeah, I mean, so it's crazy, crazy. And if you just think about it alone, the dividends alone for Charlotte is going from 3.48. 3.48 is the present value, no payment, 45 years, and to 53.63. Her dividends alone have grown by 6.35%. So her dividends alone have dwarfed the rate of inflation. I'm just dividends. And then if you just look at your dividends, you don't even care what the markets did. It's fantastic. Anyway, I love it, man. I love it. I think this is fantastic. So politicalcalculations.com or politicalcalculations.com. You'll get lost in here. I know I did. I love it. All right, we'll see you next time.